For more on the tech sector and also venture capital investments in 2011, we're joined by Andrew Zalasin. He's the CFO for RRE Ventures, a venture capital firm. Andrew, good to have you back.
Good morning, Betty.
Okay, so what brought you on was this survey that came out from the National Venture Capital Association, right? Which is they had surveyed all these venture capitalists across the country, and they said basically, what do you see for 2011? And more than half said we're going to see more venture capital, we're going to see more investments. I think about a quarter said it was going to stay the same. For you, as an early stage investor, where do you fall on that?
Well, we see an increase in velocity as far as companies being formed and companies being funded. There are two sides to that. One is that new companies, don't need as much capital as they did a few years ago. So the number of dollars going into companies probably stay about the same or decrease.
But why don't they need as much money as before?
The technological advances are allowing companies to raise $750 or $1.5 million to reach a proof point where only a few years ago they were raising $4 to $5 million to reach those same proof points.
Oh, really? Okay.
So, while there is company formation and that's increasing and more entrepreneurs are willing to leave their traditional jobs, given the economy over the last few years, they're going out and starting companies. So there are more companies and more company opportunities for investors.
Okay, but let me make that clear. Okay, so a few years ago, it would take what, $4 to $5 million, you're saying?
Yes.
But now it would take how much now?
Probably $750 to $1.5 million in many cases to reach the same proof point for the company to see if the opportunity and the idea is viable.
Okay, but do you buy into the fact that there's going to be more investment though in 2011?
Yes, I do, absolutely. And if you look at what happened,
of course you would, right?
Yes,
it's your business.
We're the eternal optimists, and what happened is in 09 and 10, a lot of venture investors were looking into their existing portfolio. Okay. Times were not good, and you were wanting to make sure that your companies were very focused, that they knew that the dollars they had may be the last that they would see for a while, and so they would be successful based upon the capital they had. So there was a lot of looking into your portfolio as opposed to looking for new investments.
What happened in 2010 with the Groupons, and then you hear about Hulu and others, does that make it easier now in 2011 for companies to raise the money then, early stage companies?
What makes it easier is that in 2010 we saw an increase in IPO opportunities. We in fact had one company that went public in 2010, and it's traded about 3 times what it was. That was a company called Broadsoft.
Broadsoft, okay.
So that was a company that actually turned down an opportunity to be acquired 5 years ago. They decided that they wanted to continue the business, raise a little more capital, and then potentially go public.
Okay.
2 and 3 years ago, the IPO window basically shut. And so companies like Groupon, if they were given an opportunity to sell perhaps a year or 2 or 3 ago, may not have said no, because they didn't see an opportunity to go public. Now, because the public markets are there, these companies are seeing an opportunity to build the company, be an independent company, and take it to another level.
So then in 2011, the most likely exit strategy for some of these companies will be an IPO, or will it be just raising more funds, or what?
Well, I think there's going to be a combination from an exit point of view, continue to be strategic acquisitions and IPOs. More strategic acquisitions, which have been really the order of the day for the last 2 years, but increasingly more IPO opportunities.
Okay. Lastly, Andrew, are you raising money next year?
Well, I know that the industry is looking to raise a lot of funds in the next coming year. For right now, I'm not allowed to actually comment on that.
Okay.
But yes.
All right. Andrew, thank you
It was a pleasure.
for joining us. Andrew Zalasin of RRE Ventures talking about the future of venture capital.